Good evening and welcome you all to the weekly stock market presentation of SC Securities. And this week also we are here to talk about some information or news from the Colombo stock market and the Sri Lankan economic front and some important insights from the commodities in world markets and the financial markets as well. So let me begin with the stock market performance for this week. Another dull week for Colombo Stock Exchange, where both the indices have witnessed weekly declines throughout the week ahead of the budget speech that is supposed to be presented on the upcoming 14th of November. That means the next week, Monday. So with this, especially during the Tuesday's trading session, market decline in terms of both the indices. During the day, SPI declined over 2%, with having points down of 224 to close at 8,267.77, and S&P/SL 20 index with index heavyweights also declined by 66 points to close at 2,518.83. And the selling pressure that persisted on the retail favorites like Expo and LIOC became the major cause of the major laggards to report the said decline in both indices. So during the day, turnover amounted to be 1.12 billion, and that was comparatively lower to this year's daily average turnover, whereas foreign purchases on a positive note picked up to report a value of 91 million on contrary to 9 million worth of foreign sales. However, during the rest of the week, the market actually managed to slightly pick up in terms of indices, but that was even on very thin trades. So turnover levels were remained to be very low compared to those of during other weeks. So during Tuesday's trading session, the SPI gained 25 points to close at 8,293.50, whereas S&P/SL 20 index also picked up by around 23 points to close at 2,541.58. So during the day, turnover was even declined compared to that of previous day to report just a value of 831 million, and foreign purchases reported a value of 68 million over 8 million worth of foreign sales. During Thursday's trading session, the slight pickup or the slight bullish sentiment continued to persist, and SPI gained up by around 29 points to close at 8,322.62, whereas S&P/SL 20 index also gained by 18 points to close at 2,560.28. So during the day, the turnover was picked up to report a value of 2.3 billion, and that was basically aided by the over 1 billion worth of foreign sales from the commercial banks. So with that transaction, the foreign purchases somewhat lesser compared to that of foreign sales during the day. So foreign sales altogether reported a value of 1.17 billion, whereas only 39 million worth of foreign purchases reported. So because of this transaction, at the end of the week, net foreign position was remained somewhat negative, whereas net foreign outflow was reported for the weekend at 11th November. And if you look at Friday's trading session, that means today's trading session, SPI gained up by 96 points to close at 8,419.06, and S&P SL 20 index also picked up by around 20 points to close at 2,580.18. But despite the increase in terms of both the indices, the turnover remained very low. That was just a value of 862 million. But again, foreign purchases picked up to report a value of 94 million for the day, on contrary to 3 million worth of foreign sales. But because of the big transaction, the big foreign sales that took place during Thursday's trading session, altogether for the week, net foreign outflow was reported, and that was amounted to be 903 million. So throughout the week, SPI declined by 0.86% and S&P 20 index also declined by 0.20%. Then let me move into the treasury yields. Treasury yields in terms of 3-month yield that was slightly picked up by 4 basis points to 33.14%, and 6-month yield remained at the current level, the previous level of 32.53%, and 29.55% was the current yield for 12-month treasuries, whereas it has declined by 2 basis points from its previous week yield. So we observe the trend whereas majority of the bids are being received for 3-month yield, and most of the bids accepted by the central bank from this category. And then moving on to spot rates, LKR in terms of USD remained to be the same for the week, but in terms of JBP, EUR, and JPY, the Sri Lankan rupee reported a sort of a depreciation. And then let me move on to the economic news for this week. So this week's talk of the town became the construction activities that have began in the West Terminal of Colombo Port. The construction work which is worth of 789 million US dollars. West Terminal in Colombo Port began the week, and this project is led by Adani Group, which is having 51% stake of the project, and the Sri Lankan conglomerate John Keel's Holdings also have a stake of 34%, whereas the remaining 15% is held by Sri Lanka Ports Authority. So this project lasts for 35 years, and that will the agreement will execute under build operate transfer contract. So the first phase of the constructions is supposed to be end by the end of the year 2024, and the second phase of the project will supposed to end by the mid 2026. So with this project, the cargo capacity is further expanded by 300 million 20-foot equivalent units, and the project is supposed to be the largest foreign investment in Sri Lankan port sector. And the project intended to build a jetty which is a length of 1,400 meters, and total terminal area will account for 65 hectares. So apart from this major project, one of the biggest foreign investments in Sri Lankan port sector, the Adani Group from India is handling two another renewable energy projects, and that are supposed to be taken place at the northern province of Mana and Punari. And apart from that, the Central Bank of Sri Lanka has published the recent economic developments and the prospects for Sri Lankan economy for the coming year 2023. So this basically attempts to figure out the progress in the debt restructuring from upon the back of International Monetary Fund and the current development in terms of Sri Lankan economy regarding the heading towards the disinflationary path, and the other circumstances were taken into account. And apart from that, this report further suggests that the Sri Lankan economy, the revival, is expected to take place at the latter part of 2023, and this is will be basically depend on the situation of Sri Lanka's debt restructuring progress, which is now at an advanced stage, and the extended fund facility from the International Monetary Fund. And let me move on to some highlights from the commodity markets and world markets, international financial markets. So for the week, oil ended up with a slight decline, but by the end of the week, especially during Friday's trading session, that picked up. So for this decline, that was basically due to some lingering fears over demand from the China, the largest oil importer, with some COVID related curves, but now the authorities had made the decision to ease the COVID restrictions. So, with that, the oil prices will expect to pick up because the demand will be somewhat come back from the Chinese end. And but however, gold, copper, and aluminium picked up for the week. So gold reported their best week since March 2020 as signs of cooling inflation, cooling US inflation will steer the investors' demand for the gold as the investors are expecting less aggressive rate hikes to come in place ahead of the policy meetings that are taken place in forthcoming. And aluminum and copper prices, as I mentioned previously, also picked up for the week. And it was also reported from the London Metals Exchange that they are continuing to let Russian aluminiums to trade in the system because a significant portion of the market is still planning to buy Russian metals in the year 2023. And looking at the international financial markets, world eyes are on the US midterm election. So far, the election race is being conquered by the Republicans. So, this midterm election is to appoint members to its Congress, which consists of the House of Representatives and the Senate. So, this is a neck on neck battle where Republicans and Democrats both on the battle to gain the victory in Senate and the House of Representatives. Apart from that, the world stocks rallied on the back of weakened US inflation data. US consumer price inflation CPI has reported an year-on-year inflation of 7.7% and a month-on-month increase of 0.4% for the month of October, which is far better than most of the anticipation. So this alarmed world stocks to outperform, especially during the end of the week, as the disinflationary path would drive to ease the burden of Federal Reserve's aggressive rate hike. So, as of the experts, now the it has clearly passed the peak of the inflation. So, this news has insulated positivity on world markets. So, the US markets and coupled with European and Asian markets rallied for the week and they have reported one of their best week after the uh, after the especially after the emergence of COVID-19 world pandemic. So with that, let me continue with the presentation from my end. Here onwards, Harin will carry on. Over to you, Harin.
Thank you, Sachini. So this week we were able to see how the price of US oil actually tested the daily resistance of 1992 and made a minor pullback from the area of 85 as it made a low of 84.74 on 10th of November. So as the price is still uh, kind of consolidating in between the area of 80 to 92, we need to wait till the price actually breaks these structure highs that we have on 10th of October we have a high of 93.62, and also on 7th of November we have a high of 93.73. So this both structure highs that we have right here needs to be broken out, and the price needs to trade above both 50 and 20 EMAs for us to actually have a bullish momentum on this counter. Then only we'll be able to see the price moving towards the psychological area of $100 per barrel. At the moment, RSI closed at the level of 52.85. This is the daily RSI, and it is in the mid range. So, like I said previously, this is a very strong consolidation area and a ranging overaging area, as the price seems to be getting declined over and over again, and the price seems to be actually sustaining below the level of 92. So once a clear breakout occurs, we'll be able to see this daily resistance will become a daily support then, and then the price would actually reach the level of daily resistance 100, 102. As for now, we don't have much of a clear confirmation, but the price closed above the 50 and 20 EMA, even though it has closed above the 50 and 20 EMA. It's still below the daily resistance 90 to 92. We need a clear breakout, and then only we'll be able to see where the price would actually go to whether it would go towards the next daily resistance of 102. Failure to break this daily resistance would be actually a consolidation again, and it would consolidate over the level of 80 to 92 once again. Looking at our all share index during this week, the index closed at 36. The RSI closed at 36.60. This is the daily RSI. And we have a structural low formation at the level of 8,199. If we round it off to 8,200. And that being said, the index made a small retest towards the daily resistance, 8,450, 8,500. As previously, this resistance was a support zone, and now we have a clear indication that this is a supply zone, as the index made a retest. So breakout above this daily resistance could bring up the index towards the next daily resistance of 8,850, 8,900, or even October 28th high, which is 8,845.6. So let's keep it to the level of daily resistance 850, 8,900, since there's a psychological area of 9,000 over the level of over above the level of the daily resistance. So far, as you all can see, the index is trading below both moving averages 50 and 20, which indicates a bearish momentum, like I have said in previous weeks as well. Still, this is quite bearish. The reason I'm telling this is bearish is because the previous daily support has become daily resistance now, and also we don't have a clear indication whether since the index is actually trading below the both 50 and 20 moving averages. Once it starts to trade above both the moving averages and the breakout occurs over 9,000, then we have a clear indication that these levels could be once again tested, and 10,000 could be reached. But still, we don't have clear indications. As for now, it's quite bearish. So as we have a structural low at the level of 8,199, 8,200, if it breaks, we have the next daily support, which I would say this is a support levels at 7,915 and 7,900. So 8,000, that key area would be initially a support zone. As you all can see previously also, this 7,959, 7,900, we had a crossing in around somewhat around in August. First week of August, we were able to see a crossing where the 20 EMA came from behind and crossed below and crossed the 50 moving average, and then only we were able to see how that bullish momentum was actually going up and reached to the level of 10,000. So therefore, still it seems to be quite bearish. Let's see whether in the coming weeks whether this daily resistance would actually sustain, or whether this would actually be a broken out. So adding to the list, we have LIOC this week. LIOC, here, if we take a look at the price closed at 179 per share, and trading below 50 and 20 EMA here as well. We have a daily resistance at 190, 195, as I have taken, the reason that I have taken this is because previously we had quite a number of rejections in August and also in October. So as you all can see previously how this area was actually was a support zone, and now it has become a resistance zone as the price is trading below the this key level of resistance 190, 195. We have a structural formation now at the level of 163, closer to the level of daily support 155, 160. And this area, this daily support 155, 100, 160 I have taken is because mainly because August middle of August, we were able to see that price made a small retest before going up. And again, end of August also, we were able to see how the price made a retest before going towards the resistance once again, 190, 195. And now it has become and now it has become official daily resistance as the price is trading below the uh, key level. So we have a bearish momentum over this counter. As you all can see, we have structure high, formation structure low, high, where formation where it indicates a bearish trend. So the daily support is at 155, 160, I would say, and the daily resistance is at 190, 195. Breakout above the level of daily resistance 190, 195 could initially push back the price towards the daily sub resistance, next daily resistance 225, 230. Oh, and worst case scenario, if it gets rejected from 190, 195, we have the daily support of 155, 160 that could be tested. So let's keep an eye on this count as well. RSI comes to a level of 40.32. This is the daily RSI. So let's see what would happen during the next week as whether the bearish momentum would actually continue as the price is trading below 52 and 20 moving averages. So thank you very much for watching this video. Please do like and subscribe. I hope you all have a wonderful weekend. Thank you very much.